Okay, this is an example of the dynamic cycles live in action. So I want to review a current live example which occurred in the markets, especially gold and silver. I think we are all familiar with the latest drop of gold and silver at the end of March, which a very heavy drop of about I think over 20% in 2 to 3 days, and it was the biggest drop in 33 years history. So we have all these headlines in the media, which everybody was surprised by this big drop in gold and silver, and I want to use this live market situation here to review what the dynamic cycles told us about this situation here, and just to give you the takeaway. The dynamic cycles did predict the drop of gold and silver before the fact, so it was quite an easy one to spot with the dynamic cycles tool set, even in advance. And yeah, let's go over this example live here during the next minutes. So first of all, I will show you a long and a short-term cycle on the gold and silver markets for the last 6 months. To review this situation here. So first of all, let's start with 2 years ago in 2011 we had this parabolic move in the silver market, and I just want to mention that everything what I show here was posted in a public forum in advance. So mainly I post my analysis on the Wave 59 board. I just want to highlight this post here, which was done in the beginning of May 2011. So in the beginning of May 2011 we had this parabolic move here of silver, and I posted an analysis which showed a dominant cycle with a length of 117 bars. So this cycle was detected in 2011. It was stable for 2010, the full year. I explained this in this post here. Everybody can review it. It's in an open forum. And the interesting point was that this cycle exactly pointed to a high at the beginning of May, where we had this major top in silver here. So this was just that this cycle spotted the major top back in 2011. I just want to review it to this time because this cycle with a length of 117 is still active in the market, and that's the reason why I want to start with this analysis back in 2011, that you should not be surprised by this cycle here. So let's review the last years. What you see here is the silver chart, the silver futures chart, and I will apply now the cycles tools and show you what it showed us during the last 6 months for the year of 2013. So we will activate the Dynamic Cycle Explorer. We will use the long-term standard template. Just press OK, and it was aligned to the low of here, beginning of 2004. I will align it there, and then the dynamic cycle showed up. And I will zoom in, to the more current situation here. Okay, so and now let's move back to the beginning of 2011. So this was exactly the situation at the post back in the year of 2011 here. So this was the top. This was predicted in 2011. We know all about this, so the more interesting period comes here when we look into the 2013 period. But this is what I want to review with you, how the behavior was of this cycle, which was already known. I have attached this indicator here, the Dynamic Cycle Explorer, which exactly showed you the length of 117 bars. So this was detected automatically. I've not entered any cycle length here, so this dynamic toolset is able to detect the dynamic cycle, and it rechecks it every bar to make sure that it synchronizes with the dominant market vibration here. So what we can do now is we will just do a step-by-step walk through through this cycle up to the current day to see what happens. So we will step forward bar by bar and just review the major cycle lows and tops here. So price is pushing down. Here's the projected window for the next bottom to come in, and I will fast forward. You see that the cycle slightly adjusts when moving forward, but that's the characteristic of dynamic cycles. And now as we progress towards the projected low here, this would be the inflection point for next up move until this point in time here, somewhere at the end of September. So we will progress fast forward. Price is pushing up here from this projected low nicely now. So we will just go forward in time until we arrive at our top projection. Okay. Now the cycle is approaching the projected top. You see price is already coming down a little bit. So this would suggest that we are at the cycle top here exactly at this point. So now we are progressed to move down into the period of December 2011. So let's again move forward in time. And you see we projected this second big drop here on the silver futures in advance. We go forward bar by bar. So the low is expected here to come a little bit more early. So price is pushing down here again. So, and here is the exact cycle low. So I will not fine tune this one. We will just stay with the basic count here, which is the low here, and progress forward in time. So now an up move is projected here in the first quarter of 2012. Let's see if the market starts to move up. We go forward here. So now it's pushing quite up. The low was perhaps a little bit too early, but we won't fine tune it here. We will just follow the simple static cycles, the dynamic cycles here. So now we're at our top projection here. So this would be the classic next cycle top here with a progressed low here somewhere in April, May 2012. So let's move forward. You see that the dynamic cycles, for sure, they are not timing right on the bar, but they are the mainly dominant cycle, and you can see that the market quite reacts to this major turning points here. So now we're progressing towards the bottoming area. So now we will monitor price closely. Okay, now we are exactly at the bottoming point here. So just waiting, price pushes down into this area here. We'll just wait after we have a reversal of price, which is coming here now. So this would be the bottom at this situation here, and we wouldn't expect now the up move of the silver futures in the period of July, August. So, and as we see, price is moving up, and we will move forward again. You see here also the dynamic cycle is very stable here. You see now the length is changing between 216, 217. The phase is adjusting a little bit to the left or to the right, and this is especially important if you deal with the dynamic cycles. But the main dominant component is quite stable, and this is what I already highlighted in the year of 2011. And you can see that this cycle is quite stable and predictive during the full year of 2011 and 2012 now. So we're quite moving towards our next projected top. So price is pushing up into this top projection here. So we will just wait until it rolls over, which is the situation here. So now we will expect a down move into the end of the year of 2012. So we will progress forward a little bit. So I will not fine tune it here. This was the classical top here mentioned. So let's see if price is able to come down, which is happening now. You see the shifts here, which are important to follow. You see cycle length is changing a little bit around the length of 117s, but it's quite stable around this length setting here. So now we are approaching our low point here somehow. So let's wait. Okay, so now price is coming down a little bit. So this would be the classic situation here. So more sideways move here, but let's see if we got the next how the next move is going on. So we'll have the top projection here somewhere in March 2013. Okay. We'll just move forward until we arrive at our long-term cycle here. So okay, and this would be the. So now we arrive at our top projection here, which is this classical one here. So now we project a down move here from this point in time. And we all know that this was the exact point at the end of March 2013 where the big drop occurred here. So this is, you see, this is the crash which was mentioned by the media hype just during this period here. So this is the behavior of the long-term dominant cycle, which is still active and was mentioned just in the year of 2011. So I will just highlight the trading if you did nothing then just following this dynamic cycle here. So I showed you the classical points. I did no fine-tuning here, just pure dynamic cycles, and this would have been the trading based on these cycles. So we have just one trade which would have not been profitable, so but all other trades would have been profitable. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, and 1 out of 9 trades was a loss or was slightly a sideways move here, and all other trades just following the classic dominant cycle would have been quite profitable here. And what I want to highlight it here is that exactly at the end of March we got this sell prediction here just ahead of the big drop. So even the long-term cycle showed us this major drop at the end of March. So I want to move on to another point. This is a long-term cycle. The main thing is to monitor a long-term and a short-term cycle in the same market. So this is especially what you maybe see here. There's my research shows that there's mainly one major long-term dominant cycle and one major short-term dominant cycle active, which interfere with each other. So you should try to define the long-term and the short-term, and that was the reason why I have included this template. So you don't have to do anything. You don't need to press the short-term or the long-term preset. So this was the example of the long-term cycle, which was already shown in the year of 2011 in an open public forum. So this is no cherry picking here. This is just the review how the cycle behaved and gave you this top projection here. So now let's move to the short-term cycle, and I want to also use an example which was posted live in advance. So this was the long-term cycle. The next example is based on short-term cycle, which was posted also in the open forum on the Wave forum. So this was posted on the 22nd of February this year, where user of the cycles toolkit just highlighted this possible low point here of the dominant cycle. So this was an analysis of a short-term cycle with a length detected about 40, which pointed to this low here. And now I want to review this short-term cycle also live on the chart here with you together. So now first of all, let's move back into the end of December here somehow, to see how this cycle behaved. So we had a major top here, so this would the point perhaps for align the cycle here. So we would activate the dynamic cycle explorer. In this case, we just use the short-term setup here, press OK, and just align it to this major top here. And this cycle now shows up here. So the cycle length again is detected completely automatically. There was no cycle length detected. This is the main feature of this toolkit here, that it's able to detect the dominant cycle length automatically. You have an alignment here between the low, the top, the low, the top. So this cycle is okay here from a short-term perspective, and it predicts a current at the current situation is a low point here. So let's just have a follow-up with this cycle here. At this point, it's projecting an up move here into the mid of January. We will do a step-by-step review. You see the shifting and adjustment of this dominant cycle, which is detected automatically by the toolkit here. So now we are at this possible top projection, which means here we have the top. Now we have predicted a down move here into this area. And it's moving down here into this period. Also price is coming down into this period. Now we're exactly at the down situation here, and this is exactly the situation of February 22nd, and this was the point in time where this cycle was shown to the public in the open forum here, because it was quite stable here and predicted now the up move into the end of March. So now let's move forward with this cycle here. You see it's adjusting here, price is slightly moving up into this situation here, and now we are exactly on the top position here, so which is here now at the current cycle top, which is now projecting a down move here. And then let's have a follow-up here from this point in time. And as we know, this was the big drop, which was mentioned by the media, which a drop of about over 20% just in 2 to 3 days. So this is just the second example that also the short-term cycle predicted this top here and this big down move here. And so again, this is no cherry-picked example here. This cycle was posted already in February 2013, with this low here, and the user posted an update exactly at the end of March, before the big drop occurred. So we had this prediction live ahead of time in the forum here. So you see here, I don't have cherry-picked any example to review with you in this demonstration here. This was a live example. The charts have been posted in a public forum based on the dynamic cycle toolset here, and you see how nicely they have been able to predict ahead of time the big drop in gold and silver here. The important thing to mention is here, I've shown you two examples. One example of the long-term cycle, which predicted this top here at the end of March, and the example of the short-term cycle, which also predicted the top here at end of March. So the important thing is that you have a cycles within cycles alignment for a major top at the end of March, predicted by cycles. So, and you would quite expect such a big move if you have a cycles within cycles alignment. So in the end, it's no surprise that we saw a big drop just at the end of March in the gold and silver markets, because we had just an alignment of the long-term and short-term dominant cycles, which have been detected in advance by the cycle toolset. And then as I've showed you, I've just used the standard settings here, and everything was also posted in advance by some cycle clients here. So this example should give you some idea of that the dynamic cycles did predict the drop of gold and silver before the fact. And it was a classic cycles within cycles alignment of a long and short-term dominant cycle. We had this long-term cycle with a length of 117. This one was active since the year of 2009, and this was posted to the public already in 2011. We had a short-term cycle with a length of around 40 bars or 40 days, which was active since December 2012, and again, this also was posted in a public forum already in February 2013. So two cycles are not detected after the fact and just shown you here to highlight it. These cycles have been detected in advance to show you these moves in gold and silver, and everything was posted by users of this tool set here. I hope this gives an idea about the about the possibilities if you are able to analyze dynamic cycles and use the dynamic cycles, and in the end should give you an idea how simple in the end it is if you are able to follow these cycles in the market. So in the end, we as cycle analysts have not been surprised. Again, we have not been surprised by the drop in silver. So the media hype was just, oh, why did this drop occurred? But in the end, as I showed you, if you have done your cycle analysis, we have seen that at the end of March, we had this big alignment for this big drop, and we saw this 20 to 30% drop in the markets, but the cycles told us just in advance. So I hope this was a nice live example.